Friday. Bitcoin's pumping and feeling good, man. Real good. So, first of all, I want to say hola! Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where, unlike the other boring and stale crypto channels, we take the mundane information and package it up in a fun and sexy way. Then Bitcoin is right now testing this 30K region. Now I say, it's Bitcoin's pumping. We went from 29.8 that 29.7 a couple of days ago or like yesterday, and now looks like might be on the other side of that 30K mark. So we do have Forrest from Sistine Research co-hosting with us today. So big shout out to you, brother. Thanks for joining us again, and we'll get your insight on Bitcoin in a little bit. But how you doing, brother?
Doing well. Thanks for having me on. Yeah, it's funny when the market's been as sideways as it has for the last, at least Bitcoin's been sideways for 30 days. When you get that 1 or 2% pump, it's like everyone's holding their breath, like you're wondering, is this the one that takes us back up to 31K plus? But it looks like we're just hanging out around 30K. It's like that meme. It's like that meme with Beetlejuice just hanging around.
Yeah, we're excited here because we are up actually 0.7% on the 24 hours on Bitcoin. This is out of control, guys. I don't even know what to do with myself. So I do know one thing to do is shout out our sponsor. So we got Cam's Blue Wire Tech. They help us with all of our internet-based networking solutions. Brings you our 4K stream today. Also secures the network with their IT security as well. So if you want a little more info for your business, link in the description. Go check them out. And before we get too far ahead of ourselves, you can't have. What did I say the other day? Can't go at least 3 days without a Biden video. So. Definitely got to shout out my boy Joe. So, without further ado here, Rocco, let's see. Now my man here. Oh, is it not? Yeah, I got to refresh this. Hold on a second. Well, anyways, yeah, we got your boy Sleepy Joe, mumbling like always. There we go. All right, so you ready?
Yeah, ready.
Okay.
Right here.
How many times you read that a recession's coming? People in Wall Street today said, no, they don't see a recession coming now.
What?
So he just here's the translation. How many times do you read that inflation? Nope, he's not. He didn't mean to say inflation. Recession's coming, and then they've even Wall Street today said, no, y'all don't say recession coming now. Let's just see if we can maybe understand this one more time.
How many times you read that a recession's coming? People in Wall Street today said, no, they don't see a recession coming now. How many times?
I mean, here's the thing, dude. It's at some point it ends up being a little concerning that a man can't go one speech without just completely dropping the ball on pronunciation and forming sentences.
Yeah, it's weird for sure. It's uncomfortable for everybody involved.
All right. So I want to take a peek here. Got some situations that you might relate to when it comes to crypto investing here. So crypto investors preparing to turn 1K into $7. And so, yeah, that's I've been in that situation before. You got all your powder and capital there, and you push it all in, and well, you go for bust. And then also, here's a library book where, when you would get your school books, you would put your name in the front. And this is deemed by Chris Blake Bakke. This is the original blockchain, and so this is one of the oldest ledgers that I've personally used, and. Did you have your name in your school, in your textbooks growing up there, Forrest?
Oh yeah, it was so funny. You always like open it up and saw like the kid in the older grade who had it before you, and like you wanted the popular kid's book.
Mm-hmm. And then you're like trying to figure out like who drew dick pics in your book. You're like, which one of y'all assholes was it?
Yeah.
So anyways, we're gonna take a look at the markets now. As we mentioned, Bitcoin's rallying. We are officially over 30,000, $18.85. Can I get some bullhorn sounds, Rocco? That's right. So so we got a little rally there, but before I get too far into the market overwatch, I did have where is it at? It was a interesting. Did I close it? Well, here, why don't you take a peek at the Bitcoin chart? I had some on-chain analytics I wanted to take a look at. I'm gonna pull up here. So I'll send it over to you, Forrest. What are the Bitcoin charts looking like? And let us know what you're looking at.
Yeah, for sure. Let me pull up my Bitcoin charts here in just a second.
Or actually, real quick, while you're pulling that up, I do want to give a shout out. Sailing to Crypto has upgraded to the whale membership. And so, big shout out to you. One more whale member in the club.
She blows.
There it is. All right. And he also gifted 5 memberships as well. So big shout out to you there, Sailing to Crypto. Appreciate it.
All right, we good to do charts?
Yeah, go for it.
Good.
Awesome. Okay. Sweet. So yeah, this Bitcoin range has been a 30+ day range, and oftentimes you don't see ranges go from this long without some sort of a break. So this has been a 30-day range, and it's been give or take 8% to the upside, 8% to the downside, with most of the price action in roughly a 5% range. Now, we've recently, as of moments ago, if I can find my brush tool, moments ago, started bouncing up above 30K. Now, 30K is your key resistance level. It's your psychological level. There's tons of evidence, and I say this every day because we've been at 30K for so long, but there's tons of evidence to suggest that your key psychological big even levels like 30K or 25K or 40K, 50K, and so on and so forth can act as support and resistance. We've seen this be the case with Bitcoin spending a ton of time holding 30K. Now it's going down for a little dip, testing the bottom of this range. Now, if we recover 30K here and stay above it, that is bullish, right? So we're just sitting on this 30K level, figuring out what's going to happen next. A lot of stuff, including Solana and Cardano and other stuff, is just sitting on their trend line, sitting on their support levels, and this is simply a back test. So we lost the level, right? We reclaimed it, but then we lost it again. So that turned into a deviation. And now all we're doing is sitting and waiting and paying attention, eyes peeled to see what Bitcoin's going to do next. If we start shying away from this and then we go and make a new low, that is bearish, right? And if that's the case, then we're probably looking to 27.5K or potentially 30K, or I'm sorry, 28K. 28K, I'm going to draw this zone here, not haphazardly, but just without throwing on the margin pressure levels. You see all the resistance and prior support that we had in this region, 27.5 to 30K. I'm also going to show you guys the trend line that I'm paying attention to. We'll get this Ray tool out. This is just the easiest way to draw trend lines as objectively as possible, just making sure you're grabbing your bottom points there, right? So where would I be looking to pick up Bitcoin or bid Bitcoin in the case where we get rejected here from 30K? We're looking to trade it down, and we're looking to bid this trend line, or at least close enough to this trend line, around 27.5 to 28K. Now, if we break down below this trend line, that's obviously bearish, and then we can talk about re-entering 25K or bidding, right? Bidding 25K. There's your 25K level that we've already held over here. right? We can talk about shorting down to that level. And if we re-enter there, then we're going to be talking about shorting lower and lower and lower. But right now, I don't think there's too much reason to panic. We're still sitting at 30K. We're going to back test it. If we don't hold, then we'll talk about these levels and all these levels to bid. And if they break, we short. Otherwise, if we reclaim 30K, time to get long. I think you could realistically just long a reclaim of 30K here and not and just look to close on that's a short position on a long position. Just look to reclaim or look to bid the reclaim, keeping a stop loss at a new low, right? So below this range, and then just target 31K. 31K is your margin pressure level resistance that we've been talking about for quite some time on this channel. And that would give you over 1.5 to 1 risk reward. You could also, if we reclaim 30K, you could keep your stop loss a little bit tighter right below 30K, right? And that's going to give you 3 to 4 to 1 risk reward on just a quick scalp back up to the top of this range. So trading the range in and of itself can be pretty profitable. And then if we break out to the top side, we'll talk about targets when and if that time comes. My personal target is closer to 36K, but we want to see that happen before anything else. On the shorter term timeframes here, I'm going to just zoom in so you guys can see the hourly chart and what RSI is actually doing. So RSI on the hourly has actually recovered the 50 level. This is momentum. So we're carrying a lot of momentum back into this 30K region. So we're about to find out if we can just carry this momentum back through, get back up to the higher RSI, overbought RSI levels, and push through 30K, make some support. That's what we're going to be looking for on the shorter term timeframes. On the hourly, again, we're just eyes peeled looking at 30K. Everything hinges on 30K, and then down here at around 29.5. Right? We get rejected from 30K, go below 29.5. That's your short entry if you're looking to short. The only other scenario that could get you chopped up would be being patiently waiting for this to push back down and break below 29.5, entering the short. It sweeps the liquidity, turns into a deviation, and then reclaims 30K, in which case you're just going to have to abandon your short trade, get stopped out, and then re-enter on a long and make it all back. Hopefully it doesn't get too difficult, and hopefully it doesn't get too choppy. But again, that's just how you got to play these tight levels where we're just chopping on 30K for a week straight. So hopefully that was helpful.
So I heard over 30K we go long. So
30K plus, yeah. Under 30K we're a little dicey.
I'm all about is this a good entry point? Is it? Is this the trampoline? All right. So real quick, I do want to, before I get too far into the markets, I wanted to take a peek here. And this is about your pension fund, about your job that you've been working at. And that really don't take for granted what you have, because what you have can be taken from you unless it's on a blockchain. And so what am I talking about? Well, here it is. And so this is per Insane Reality Leaks. And this is a worker finds out he no longer has a pension after working for 30 years. And, you can't promise a pension and then take it away. But there's a trucking company called Yellow here, which is this guy or this company works for. Well, they're going out of business and they're closing their operations. And so you can't issue any pensions if you're not a company anymore. And so anyways, the guy, so they're having a meeting and they break the news that company's closing and no pension for you guys. So.
It ain't you. It's these motherfuckers right here. It's the motherfuckers on top. But now we gotta do this shit again. We gotta do this shit again. And nobody tell me. Nobody here tell me why.
So definitely not funny. And I wanted to show this, and this is a full minute of him just ranting and cussing, and I know he's pissed off. He's pissed off, man. And
it's right to be pissed
and he
off.
should be, right? And I know this is just shows you that if you are trying to protect your future, your investment, your retirement, the traditional way of going about it is not free of risk. And, I did want to segue to our channel sponsor as well, I Trust Capital, which if you're trying to put away money for your future and not have the risk of being rug pulled by your company, Well, you can DCA into Bitcoin, pay taxes now, and not pay capital gains later through a traditional Roth IRA account. And it's not anything new. This has been an ongoing reality that your company can go under, and so can your retirement plan with it. And you do have 401ks you can roll over, and so those aren't lost. So there are remedies to that, but people just simply relying on a pension might not be the best way of going about it. Just shows you the faults and the inefficiencies of our financial system and how people are trying to preserve their wealth. And some people just preserve their wealth by simply putting time in a company, hoping for the pension. So guys, DCA into something, even if it's not crypto, I'd recommend just DCAing into a 401k, commodities, at least some index stocks, because if you just put your blind faith into traditional companies, companies go under. So I don't know if you want to add anything to that, Forrest. Do you have any 401ks?
No, I mean, look, yeah, I don't even have a 401k. I took the 10% withdrawal penalty early to roll over my 401k that I had for a couple of years working for a company. And look, I get like the whole thing, like, it's basically free money if you've got a 401k employer match, right? Some companies will do that for you and they'll just basically match, up to 3 or 4 if you're at a good company, like 3-4%. And I get that, right? Like I get that if they're just going to allow you to DCA into the S&P 500 and they're going to just, double that for you, then yeah, I totally get that. That makes sense. It's essentially free money, but you can't be too careful. And I personally made the decision, now that I'm not, working for a company, it just didn't make sense for me personally to go with the 401k. I just manage all my own stuff, pay my taxes, and to each their own. I think we're in a space where that increasingly might start to make sense, but I just don't trust anyone else with my money but me that at the end of the day. And I know that's, a lot of people have been preached to, the Dave Ramsey, like, remove all your debt for, invest in your Roth IRA, so on and so forth. And those are all great tools. Those traditional finance tools, those are all great. I'm not condemning those. You can definitely leverage those in your favor. Me personally, I'm just a little bit further out on the risk curve, I guess, and really into the self-custody aspect of crypto. So.
Miguel Costa said, Rob showed that video to shill I trust. No, I did not. I showed the video, and then we offer a service that is a great option if you don't want to trust your money in those. But no, I mean, our sponsors are companies that we believe in. And so our two sponsors, well, one handles our networking, and I've definitely gotten my money worth by being on the phone with them all the time trying to get this 4K thing going. And also, I Trust Capital, I think, is a company you can trust. And I mean, I like the platform because it's giving you an opportunity to DCA without paying taxes, or at least not paying the taxes the traditional way through. I'll leave it at that. But anyways, taking a quick look at the market, we do have some of the biggest gainers today. Maker up 12.5%, up 30% on the week. Synthetics up 9%. And then some of the biggest losers today, Rocket Pool, GMX, Compound down 2%, but not too much red. Just 2 projects above the 2% here. And then I want to get into, let's see here. I got, no, here it is. So before we get into our headline, we have FTX lawyers have accused and sued Sam Bankman-Fried of financing his criminal defense with $10 million of misappropriated funds. This is kind of
the criminal. I mean, where are you expecting the money coming from?
That's what I'm saying. Like, how did you expect him to fund himself? At one point, it's just like, sometimes lawyers, they try to squeeze people. Lawyers don't have the best image because, you get sued and you're not really happy with them. Anyways, so lawyers don't have the best image, but this definitely doesn't help the lawyers. I'm pretty sure he didn't think his money was squeaky clean when he represented them. And I feel like you just have a falling out. You're like, you know what? That money you paid me with, that was fake. It wasn't yours. It wasn't yours. Did you think he had clean money set aside for his defense? Or do you think that all of it is a scam?
I don't think he's got any clean money left. I'm surprised it wasn't his parents that financed his defense. Yeah, this is weird. I don't know. Does that mean like the FTX lawyers are? Maybe it's the FTX lawyers, like the ones that aren't defending him. Like the ones that are defending FTX. For isn't FTX suing Sam Bankman-Fried as well? So if I'm not mistaken, like, yeah, Sam Bankman-Fried may have, separate lawyers that are being paid with dirty money. I don't know, man. Like, there's nothing clean about that guy at this point. It'll really be interesting to see if he actually serves any real time. That's what I'm most concerned with.
Would you have wanted him to say, look, none of this money's mine, and I'm going to take a public defense attorney? Do you think that would have been the right move?
No, I mean, at the end of the day,
because I think that's the only other option, right? That's the only other option.
If I'm him, I'm getting the best defense money can buy.
There you go.
Yeah.
All right, so moving on to the main topic here. Our thumbnail theme and the theme of today's show is about the rise of Polygon. And without any charting experience and just going off of my I'd like to say fortitude into looking into the future, I will say that I said $5 on our thumbnail if you watched that. $5 Polygon, is that a thing? Is that possible? Well, I say it is. And why is it? Because, well, Polygon's been growing in the bear market. It is running a scalable solution on Ethereum's network. Like, what gets more utility, or what will probably have more utility in the future? Will it be Lightning Network, or is it Bitcoin Layer 1? I feel like there's going to always be more transactions and more building on scalable networks on the Bitcoin blockchain because, well, the base layer is just not practical for everyday use case for thousands or millions of transactions. The same can be said with the leading smart contracts, which garner more utility and more use case and are going to have a ton more transactions. And so the leading layer 2 Polygon, the scaling solution that offers throughput at a cheaper rate, of course they're going to be prosperous. And they've obviously taken the lead here in this whole sector. And we've had competition pop up with the likes of who was the competition there with them? What was the Arbitrum? Arbitrum came out. So you had Arbitrum, and so I feel extremely confident that Polygon is going to get to $5. Now, when will it get there? That I'm not too sure. But I was taking a look at the chart here, and then we'll go over the chart here as well after the article. I can get your perspective on there. I'm just looking at where was it previously, all-time high during the bull market, $2.50. It hasn't dumped off as much as the other tokens. It's not down that 90% that we're seeing with a lot of other prominent projects or altcoins, and it's at 77 cents. It was at $1.50 just a few months ago or 5 months ago. And so in the bear market, it was already getting close to its previous all-time highs. And so I feel very confident that in the coming bull market, $5 is a pretty conservative price range. And if you take a look at Polygon's market cap compared to the competition or compared to the other top projects, it's outside the top 10. And a solid 5x, for example, which would put it at $3, almost $4. So a solid 5x would put the market cap at 35, below BNB, and so I feel pretty confident on that. Now, with that said, what has changed? Well, nothing's changed on the base layer. Nothing's changed with Polygon. However, it has, and then this article has kind of outlined its use case growth. Its rise in daily active users has now surpassed. This is obviously in a short-term time window, but in that window, recently, this week, it has surpassed the likes of Ethereum and Solana. And according to the data from DeFi aggregator website DeFi Llama, the total active users on Polygon blockchain in the last 24 hours is sitting at 405,000 users. This is in contrast to the total number of daily active users in the same period for Ethereum, which was 300,000. And then Polygon seeing over 50,000 daily users compared to Ethereum. And then the rival Arbitrum is sitting at 170,000. And that is still kind of new and shiny. So are they going to have less users over time? Because I don't think people are using Arbitrum, and I haven't heard about partnerships with Arbitrum in the same way that I have about Polygon. And then Solana as well, you're going to throw that in the mix, 122 daily active users. And so is there any real competition? And then it's not just the daily active users, it's also the dApps that are being built on it or protocols. And if you take a look at the protocols on chain is also on the rise, coming up behind Ethereum and Binance chain for the highest number of DeFi protocols. Now, Ethereum currently has 855 dApps. Binance Smart Chain has 629. And Polygon is at 445. So it's not far behind Binance Smart Chain. And now let's keep in mind that this is a layer 2 that has more dApps than all the layer 1s outside of Ethereum and Binance Smart Chain. And Ethereum and Binance Smart Chain are layer 1s, and it's closing the gap significantly. So think about that. You have more than 50% of what is built on Ethereum on the base layer being built on a layer 2. Think about that. You have a closing gap, and at some point, I think this will flip. So we're getting close to it. So imagine the base layer has less dApps than the layer 2 that's built on it. That just shows you how much this whole sector is growing. And that's all I got highlighted from this article. So I'll send it over to you. I know you like Polygon. I never really heard you talk too far depth on some of their dApps. I haven't heard you say too much about their NFT ecosystem, but I know you are a fan of Polygon. Is there anything going on in the Polygon ecosystem that maybe you caught wind of? And also, what's your reaction to their daily active users just
Yeah. So, couple things. Yeah. So I think a large part of their growth strategy, and I'm actually, I've got a meeting scheduled with the head of growth over at Polygon next week. I'm going to get to meet with him, and I'll definitely ask him some questions, and maybe we could get him on the show at one point. But I'm really actually curious to dive into their growth strategy a little bit more. But I think one of the big differentiators is the level of emphasis that they put on growth and partnerships, right? And one thing that I've noticed from the Polygon ecosystem is it seems that, you have a lot of like these pure decentralized protocols, like that are just basically code written on the blockchain that anybody can build on, but there's no like hand holding with these other protocols. Whereas like if Coca-Cola wants to launch an NFT project, which they did, and they did it on Polygon, if they want to launch that on Ethereum, they've got to go figure out how to do that. Or they can go to Polygon and talk with real people and get real expertise and real help and kind of have their hand held all the way through the process with a reputable blockchain provider, right? Or service provider. So to me, it just feels like Polygon is just making it easier for companies and projects to build on them, and they're providing the support to do so. I will say with the new token, so if you haven't heard yet, Matic will become POL, P-O-L. POL. You've got Solana, SOL, and now you got POL. So Polygon will have a kind of like this unified token that'll oversee and work for all of the different blockchains. They have their ZK EVM blockchain, and you can actually see I do want to share this chart so you've got Polygon TVL sitting at a couple $1 billion, But then if I go to if I search here, and I'll actually share my screen, I want to show their ZK EVM chain. It'll only take a second. So their Polygon ZK EVM started with 0 TVL when it launched back in late March, and it's just steadily been inclining. And it's still early over there. It's only $33 million in TVL, but you compare that to some of the larger, some other chains right now, and that's a steady chunk of TVL, and that's from a DeFi perspective, just going to some of these protocols on Polygon ZK EVM and providing some liquidity, in my opinion, is a really good way to qualify for an airdrop. And that airdrop has been pretty much confirmed by the founder of Polygon. He said that they may airdrop POL tokens or Matic tokens, essentially, to people who are providing and operating, providing liquidity and using ZK EVM and any other chains that they're dropping. So they've got their fingers everywhere. They're just all over the place. They're in the ZK narrative. They're obviously in the L2 scalability narrative, and now their token's going to oversee their entire ecosystem. It just makes a lot of sense.
Now, I know you mentioned their ecosystem partnerships. I did have a visual here on this. So these are their brand partnerships and the products that they're developing for them. So this is all Polygon, DraftKings. You have Nothing, Stripe, Reddit, Walt Disney, Adidas, the NFL, Starbucks, Adobe, and Meta. Most of these are all the NFT marketplace with Nothing and Stripe. Not something I'm too familiar with, though, for those two, but those are Web3 applications. Now, my thing is if the user case, if the daily active users is where it is now in the middle of a bear market, most of these partnerships are pretty fresh. The NFT market is down. Imagine when NFTs start popping off again and these big companies are using Polygon to run their marketplaces or offer their products. The daily active users on Polygon, it's got to at least 10x, right? The users themselves. Now, you can say what you want about the price or the token or the TVL, but from just a straight up user base at daily active users, you're going to get at least a 10x when these platforms come online and start offering services. And Starbucks, I could see the loyalty program. Hey, buy 5 coffees, you get the 6th one free, or whatever it is, or you only earn points for every $10 you spend, which you can redeem for products. That makes sense. And then not only does the consumer benefiting, but hey, you get data tracking, and you can follow what your consumers are spending their money on and what they enjoy, and then you can develop marketing strategies around that. So this is definitely an industry that's going to grow. Not to mention Walt Disney. I mean, we know we see you can't go to the mall without seeing at least 5 or 6 stores that offer Disney products. Whether it's clothing, you go to they have full Disney stores. And then you go to Build-A-Bear, they got Disney products in there. You go to some of these gothic clothing stores, and they got all the Disney backpacks and jackets. And so they're probably one of the best marketing companies out there. You'd think they're not going to take advantage and spearhead the digital market through NFTs. You're mistaken. They're going to make their money. I mean, they're everywhere. They're on your bank cards. They're on your watch face. So. With that said, is there any? Am I out of my gourd here for saying $5 on Polygon? I don't know if you don't have to go through a full chart breakdown unless you want to, but is $5 realistic? Because I'm just looking at $1 because I was looking over the chart yesterday, and I'm just like, man, this thing was at $1.50 at the bottom of a bear market. Like literally, Bitcoin was under 20K and it's at $1.50. And I'm just like, there's no way it doesn't get up to $5.
Yeah, $5 in a bull market. Ooh, look at that super chat.
$100 super chat from my boy Billy. He says, "Don't tell David." That's for me.
That's
Don't
I'm
tell
gonna cash
her.
that out. I'm putting that right to my to my MetaMask.
Me and you, Rob. Me and you.
that's 20 Matic, right? That's this 20 Matic or 20 Pol for $100. That's $5 Matic. Yeah. I think you can run to $5. That's a 2x from last market cycle. Obviously, you know, there's no guarantees in this world, but you know, $5 Matic seems like a completely realistic price target for me for a layer 2, for one of the leading layer 2s in terms of users, and they just keep crushing it with partnerships and onboarding new users. So yeah, makes sense.
And awesome. All right, so moving on to our next topic of discussion here is Solana. This is one of your favorite platforms out there, and I've really come around to Solana, and a lot of it just comes because off of the fact that, hey, there was a massive FUD attack on Solana. I think the price got all the way down to $7. Everyone put together this Sam Bankman-Fried, Sam Coin, venture capital, FTX went under, Solana is in trouble, and well, time has passed and nothing happened, and so here it's staying here. So now at this point, I'm like, hey, if it made it through that FUD, it went through its obvious FUD of having the network go down, and if that is a problem that is addressed and a problem they don't no longer face in the future, there's no network outages. There is no reason from my perspective that Solana won't rise to at least its former glory as far as market cap and the price. And I think it will greatly exceed that in the future as well. Now, maybe it doesn't quite outperform the rest of the market. And maybe it still has a stain from the previous FUD that I had mentioned with FTX, but I do think that you're going to get a resurgence, and I wouldn't be surprised if I were to see Solana back in the top 5. I think that is a realistic scenario. And in my portfolio, which I spread out to not have too much exposure to one project, I do have Solana in there as well. So I don't go all in on Polygon or Cardano. I spread it out. And I got a little Solana in there because I believe in it and come around more lately. And that's simply because time has passed and, well, it's still here. So what do we got? What Solana news do we got to cover today? Well, Solana announced on its official Twitter handle on July 19th, so a couple days ago, that the Solang, a powerful compiler aimed at facilitating the integration of Ethereum developers into the Solana ecosystem, has launched. And so, first of all, what is a compiler? Well, it is the integration of one for this use case. It's one programming language that can translate over to another. So it's not the full EVM compatibility like we have Ethereum and Avalanche. However, you can write a smart contract in the Ethereum Solidity language and then have that smart contract without too much work from the devs, simply port over to Solana and you can launch smart contracts there. So Solang developers, they use the Ethereum Solidity programming language and the Ethereum virtual machine to create and deploy smart contracts on, they say here they're touting the energy efficient Solana network, significantly expanding the platform's developer base and fostering compatibility between the two blockchain giants. So prior to this, Solana smart contracts were predominantly written in Rust or C language, which presented a barrier for Ethereum developers accustomed to Solidity. Now, Solidity is the programming language for Ethereum, just to clarify that. Now, Solang's introduction changes the game by offering smooth transition for Ethereum developers seeking to explore the Solana network. Additionally, Solang enables developers to call on Solana smart contracts, expanding the possibilities for decentralized applications on the network. You can more confidently build bridges and have interoperability between dApps. Now, as I mentioned, not the full EVM compatibility. I think that most chains will eventually get there, and that you'll have, interconnectedness between most of the layer ones in the near future, within the next, I say 5 to 7, 8 years, somewhere in that range, within the next 2 bull markets. I think everything is going to be interoperable in the layer 1 space. It's just figuring out how to do that efficiently without losing value or creating vulnerabilities. Now, so that's what I got there. What you're the big Solana. I know you've been supportive of Solana more than I have, and I've had my emotional separation with Solana a couple times before. One with the outages, and I just felt that there was a lot of risk in picking up Solana after the FTX thing when there was just a lot of uncertainty. So you stuck by Solana the whole time. I am wishy-washy, but what do you think about Solana and this as well?
Yeah, so a couple things here. So one of the main things that one of the main advantages of Solana is that you don't have the issue of fractured liquidity, right? So that is one of the core reasons that you have scalability at the L1 level. So like with Ethereum, you have high gas fees on the L1, and if you want to get lower gas fees and faster throughput, you have to move and bridge liquidity to a layer 2, like Polygon, like Arbitrum, like Optimism, and you create this situation where you're bridging or Avalanche C chain, right, which was super popular, right? So you're kind of like offboarding, or you're moving liquidity in order to get scalability and high throughput. You have to move liquidity away from the base chain, which is, in my opinion, bad for the base chain. And it's a friction. It's a high friction experience for the end user. So unless you're like, you're comfortable with bridging funds across chains, you don't get to experience that, that high throughput and low gas fees at the L1 level. Whereas with Solana, you do get that. Now this EVM compiler or Solidity compiler, it's going to be a good tool for Solidity developers who may want to copy and paste some protocols essentially onto some Ethereum protocols onto Solana. Basically, you'll be able to write the code in Solidity. It'll compile it into Solana's programming language. And then the other thing is that you actually do have the EVM compatibility coming too. So in that article, it mentions Neon EVM, and this is a token that just very recently dropped, and it's still very low market cap. I don't know how. I've got to do some more research on it. I don't know what's being built on it right now. But Neon EVM is just it's full on EVM for Solana. So you would actually be able to deploy, not just compile and write the code in Solidity, but actually deploy EVM smart contracts on top of Solana, which would make Solana a layer 2 for Ethereum. So think about that for a second, right? You have EVM compatible. You have Solana doing everything it's already doing, and then you also have its consensus algorithm, or you also have its consensus algorithm working and its throughput working as a layer 2 for Ethereum. I know it's kind of confusing, but if you look at the valuations for layer 2s, right? You look at where Matic's at. It's right in line with where Solana's at. You look at the fully diluted valuation of Arbitrum, right? It's right there. These are multi-billion-dollar valuations just for the L2s. So you have the ability for Solana to also go in and contribute as an Ethereum L2, and that's what Neon EVM is trying to accomplish. I think they're still probably a ways away from that, but it's a really, really interesting use case. And if that happens, then Solana is also a layer 2 for Ethereum, which is really, really interesting.
Yeah, I've been keeping an eye on the Neon EVM as well. That is, as you mentioned, write smart contracts on Solana and then deploy those right onto Ethereum. And so I think that's, as I mentioned, I think that's the direction that we are going to go with all these blockchains. And honestly, the sooner that you come out the gates with this, the better. While I think other chains are going to scramble to get interconnected, because they're going to see the value of instead of trying to take users from other projects, they simply say, hey, stay at your other project and just use this little service here. And so there's no reason to throw your iPhone out the window if you can still download Facebook on iPhone and you can download Facebook on Samsung. If the two apps are interconnected but are serviced on either one, you don't need to change your service provider to operate the DApp or the app in this particular example. I do want to take a intermission here to give a shout out to the chat. First of all, we only got 90 likes, so let's first of all get the likes above 100. Do us a favor, hit that like button. Right, go, and then we got to get Davis Desk in here until he gets back. So smash the like button, courtesy of the glory. We'll leave it there. All right. So, and then we do got a few new people. If you are new here, say hello so we can drop an hola back at you. We got Sazbolix, Michael James, Trick Shots, Luke, Julio Vincenti, and Ben Jerry. So to all of you, hola! Welcome to Sin City Crypto. Also, we've been talking, we've had a few references to the bear market and the coming bull market. And, well, what exactly is a bear market? What exactly is a bull market? Well, it represents new money, right? A bull market means there's a flight of new cash and new investments pouring in. Bear market is, well, a lot of people leaving. And, well, the degens are going to stay here. And, we didn't shut down Sin City Crypto Show, but the retail investor, the novice, that's usually represented in new money. You can throw institutions in there as well, but realistically, crypto has been most of the money that comes into crypto in a bull market is from the retail investor FOMOing in. And we have a good chart on that here. And so you got Benjamin Cowan. He has tweeted here a interesting chart. So views to various crypto YouTube channels. And this on the way up correlates pretty well with the bull market. And so the white line here, this is representative of the price of, I think it's let's see here. Yeah, price of Bitcoin is the white one here. And then these, all these different color lines represent different YouTube channels, and it looks more like a heat map. And so we've seen that the users have fallen off, and we went through the bear market, but we're starting to come out of the bear market, and the price of Bitcoin is starting to rally, but yet the viewers have not ticked up, though. And so there's a correlation broken here. And I didn't pull this up because, well, hey, I have a YouTube channel. I pulled it up more to express the fact that the novice retail investor, which is probably going to drive the next Bitcoin bull market, well, they're not here. And when they show up, there's really not a spot for education and figuring out how to buy Bitcoin and use a MetaMask outside of YouTube. And so a good gauge or good measure of new retail coming in is YouTube. And so the numbers haven't rallied yet. So I'm very excited that when the YouTube viewers come back, when retail comes back, we have already bottomed out on Bitcoin, at least in my opinion. And so I'm excited to see where this new money would take crypto. And then I'll just get over to the next topic here. I wanna talk about the U.S. House of Republicans committee members. They drafted a new bill and proposed a new bill or introduced a new bill. And so this is the digital asset bill. And we've seen a lot of movement in the regulatory side from the U.S. Congress, and we had Gary Gensler testifying. You had Brian Armstrong from Coinbase speaking as well. And so here we have a new bill. So this is from the House. So a bill created a regulatory framework for digital assets has been introduced by the Republican members of the Agriculture and Financial Committee on the United States House. This has been a several month joint effort between the two committees. So it's a 212-page bill called the Financial Innovation and Technology for the 21st Century Act, and it was introduced on July 20th. So according to the company explainer, it's intended to address the regulatory gaps by creating a framework for specific risk of digital assets related activity. So the bill gives Commodities Future Trading Commission, the CFTC, jurisdiction over digital commodities, clarifying the jurisdiction with the SEC, and creates a process for digital assets originally deemed securities to be sold as commodities. So it gives the CFTC jurisdiction over digital commodities. It clarifies what the SEC can essentially regulate, and then it deems securities. It deems a process for digital assets to qualify as commodities and be sold as commodities. And basically, they say, hey, if you this digital asset here can be a commodity if you meet this, and in turn be regulated or fall into jurisdiction of CFTC. The bill also sets conditions for digital assets to be considered a commodity, with decentralization being the main requirement. So if you meet a certain threshold on decentralization, that tends to be where they're hanging their hat on if you're a commodity or not. And I think that we could probably all agree. We always reference Bitcoin as, hey, no one runs Bitcoin, so in turn, it is a commodity. Now, there are other ways that we make this argument, but that tends to be the one that holds the most weight. We do talk about use case and utility and not an investment contract, but a lot of the times the simplest way is like, hey, commodities don't have a regulatory agency behind them. There's no ruler of gold, and there's no ruler of commodities, right? And so the same can be said for Bitcoin. As one example, digital asset commodities could be sold on the SEC registered digital asset trading system. So that's exactly what we're seeing with the ETFs. So they're saying, hey, let's list these digital assets as commodities, and then you could trade your commodities however you want in a contract, a securities-based contract, and traded and regulated through the SEC. Now, a lot of this just makes sense, and this is something that I've been looking forward to. So market participants are subject to new and more comprehensive disclosure requirements and could have registration with both agencies. Now, we have recently covered the fact that they might associate KYC with some of these DeFi protocols. So are they trying to backdoor that into this? I'll give you my thoughts on that in a moment. The agencies would also be required to work with foreign regulators to create consistent regulatory standards. The government's accountability office would be required to complete a study on NFTs and how they fit into traditional markets. So they didn't give a clear outline on NFTs, but they are basically saying, hey, let's figure out how this fits into the bill. And this was just as a note, this was put together by French Hill and Dusty Johnson, who are the correspondents of the bill. They sent a letter to the SEC chair, Gary Gensler, a day before introducing the bill, and they criticized the agency's so-called regulation by enforcement when they sent that. And the quote there, and this is in the bill as well, and in one of the documents that was submitted, the SEC's existing regulatory regime is not designed to accommodate the registration or regulation of digital assets. The SEC has failed to provide clarity on these entities. And so that's where we're at. I'll send it over to you, Forrest. What do you think about all this?
Yeah, I mean, I don't know the exact details of this bill, if there's any like traps in there or whatever, but it makes a lot of sense. This would have been great to have 2 years ago. At the end of the day, I think most cryptocurrencies do fall into the category of commodities, and I think having that clear, concise classification and standards for what qualifies as a commodity, what qualifies as a security, is something that we've needed for a while now. At the end of the day, I think, from that article, it sounds like this bill is very simply just trying to provide clarity. It's not necessarily trying to regulate by enforcement. It's not trying to call any. And I think one of the key things that is unknown is what exactly are those standards for decentralization and what exactly qualifies as a commodity. If they're reasonable, if those standards and those frameworks are actually reasonable, and Bitcoin and Ethereum and some of these other L1s and L2s fit into their categorization of a commodity, then I think this makes a lot of sense. I think when it comes to the regulatory space of crypto, for the longest time, it's like you either have to just completely ignore it because it's very complicated and let it be the Wild West, which has been the case in the past. But now it's just because there's so much demand for it, it's growing so large that it just can't be ignored any longer. And the alternative is to actually regulate it, but in a fair and common sense way, and that just requires frameworks and clarity for classifying what is a security and what is a commodity. And I think it makes a lot of sense to classify a lot of the large cap cryptocurrencies as commodities. And if they could trade like currencies on a lot of these digital asset trading platforms, that'd be great. More liquidity, more access to capital, that would be net bullish for the space. And also, it would be great to be able to have people that are enabled to be able to trade on those platforms, so they don't have to go to a sketchy offshore exchange like FTX and lose all of their money or lose their money because they're having to use an offshore service when they could be using a regulated service to invest in Solana or Cardano or Bitcoin or Ethereum, whatever, insert altcoin there. So I think it makes sense. I just, don't have the specific details on the bill to know what the frameworks and standards are and if they make sense or not. But I think in general, the direction makes sense.
That it does. Makes a lot of sense. Any kind of regulation or any kind of clarity on what is a digital asset, I think just naturally makes the most sense to us, because that's essentially the root cause of all the problems, is that the developers don't know what the SEC is looking for, or what the SEC deems as illegal and what you can get sued for. The exchanges don't have any idea on which ones they can sell, quote unquote, which ones are securities, which ones are not. And there's no framework for a company to do due diligence and figure it out them damn selves. And so to expand on this, on the next topic, I'm just going to go through these real quick, but the SEC, this is pretty bullish, has given up on Coinbase's defense strike as the judge takes a stance. So what does all this mean? So the SEC decides against pursuing a motion to strike. I'm no lawyer, but sounds like they throwing their hands up, throwing that white towel on certain parts of this court case. Now, in a joint letter addressed to Judge Catherine Polk on Thursday, July 20th, the SEC asserted that it would be holding off on filing a motion to strike Coinbase's defense for now. And then this is a quote from the SEC. At this time, we will not be filing a motion to strike on any of Coinbase's affirmative defenses. And they reference the civil, the legal civil term there. Now, while the regulator fails to explain its decision, it follows the pretrial conference held on July 13, where the judge expressed that she was not supporting the motion to strike. So the judge has already come out and said, hey, you don't really have much to stand on here, SEC. And so their rebuttal was, yeah, you're right, we're just going to let it go. And once again, I do not have a law degree, so I'm not going to try to explain this. But this is what the judge said. I really don't want a motion to strike. I am really not convinced that we need to do a motion to strike. And I am not sure it's going to save anybody any time. But you will be able to persuade me on the contrary on this proceeding. Basically said, they don't want a motion to strike. You're really not going to convince me, but you can try if you want at a later date. And it looks like Coinbase simply said, nah, we're good. We're not going to try to convince you. And then Anything on this one there for us before I move on?
It sounds like they're still pursuing the case as a whole, but
Yeah.
they're just kind of not rebutting the defenses because the judge is already seeming to side with Coinbase. Like the whole,
This is
why'd you let them IPO if they're selling securities?
It's pretty similar to these like little victories that we got on the XRP case, right? On the Ripple Labs.
Yeah.
And the Ripple Labs, we had several articles or discussions on a similar to this, where hey, the SEC was not granted this motion. They tried to withhold the Hinman emails. And time after time, it was these little victories. And it gave us more the confidence that there was going to be a favorable resolution, and that the judge seemed to be leaning throughout the proceedings for the Ripple Labs. And at least this court case has just got kicked off. This is pretty new. And well, we got our first victory there for Coinbase, and it doesn't look too good for the SEC, which I think they're going to get a lot more of this, because without clarity, when you have a judge that can look at all the facts and evidence, they can see that, hey, maybe the SEC doesn't have much ground to stand on, because, well, they haven't even said the rules. And so they're trying to officiate a game without clearly setting the rules. And so when you give judgment to someone to look over that to see if it's fair, obviously it's not. Taking a look on our last topic today, Tesla confirms rumors that Bitcoin and crypto is included in the source code of payment page. So if you remember, before I get too far into this, if you remember, there was during the bull market, Tesla announced that you could buy a Tesla with Bitcoin. And that also coincided with the all-time high at that point. I think Bitcoin was trading at 40-something thousand in 2021, and Tesla announced you can buy a car with Bitcoin, and all of a sudden the price shot up to 50K. Now, let's not also forget the fact that shortly thereafter, or a few months thereafter, they rewound that because of ESG concerns and said that they were no longer taking payment for Bitcoin or payment for Tesla in Bitcoin. And so just to give you a little context of why this is something that's for a topic of discussion. Now, the crypto rumors, the rumors are now confirmed as Tesla officially added Bitcoin to the source code of its payment page. Now, it's in the payment page, but they have not come out and had a press release saying, hey, you can buy your Tesla in Bitcoin. But they did come out and say, yes, it is in the payments page. So it sounds like they're putting in the infrastructure and allowing Bitcoin as payment once again, but it has not been announced. But now, so this move marks a significant new step in both the cryptocurrency industry and Tesla, as it opens up new possibilities for adoption. And then I don't have too much here, but finally, speculation turned into reality as the source code on the official payment page of Tesla was updated to include Bitcoin. The update was then also confirmed by the company's intention to integrate leading cryptocurrency into its payment ecosystem. So they added the code, and then they confirmed, hey, yes, it's there. Calm down. But they still have not went full. They haven't went full crypto degen and allowed you to buy your Tesla yet. What do you think, Forrest? Are you going to buy a Tesla? Are you cashing in that Bitcoin or what?
I'm not cashing in crypto for a Tesla. Look, I mean, I think they know a bull market's on its way in the next year or two. They know at the end of the day, what does Tesla want to do? They want to sell more cars. They know that at the bottom, Bitcoin was worth 15, 16K, and it's 2x from the bottom now. It's at 30K, and there's been a lot of accumulation happening within the crypto space and among Bitcoiners. And I think they probably do some breakdown of their demographics, right? And I would imagine that the demographics of your average Bitcoin holder and the demographics of your your average Tesla owner or somebody who wants to buy a Tesla probably overlap quite a bit, right? So Tesla can go and say, oh, well, if Bitcoin goes to 80, 90, 100, $120,000 in the next year or two, where are our demographics? Where does our demographic of customers keep their wealth? Well, if they keep a lot of it in Bitcoin or other various cryptocurrencies, why not make that as an available payment method? And for the record, I think look, is without the Lightning Network on Bitcoin L1, is it feasible to go and buy a cup of coffee or pay a $2 transaction fee or even a 30-cent transaction fee and wait for a 10-minute confirmation every time you want to buy groceries? No, but when you're making a purchase of $30,000+ for a vehicle, I think it's one of the use cases that actually make a lot of sense for spending your Bitcoin. So I think they're just positioning for a bull market. They're just waiting. They want a piece of that Bitcoin pie. They want to sell more Teslas and cash in on the wealth creation that Bitcoin's going to have in the next year or two.
Well, it brings up an interesting thought. We got got a $200 super chat from your boy Jimmy. He's over here dropping the nukes. He says, Rob Rocco Forrest held it down this week. He saw the struggles firsthand. We weren't struggling. You stop it right now. And then we owe these guys a big hug. So honestly, the struggles that we go through on YouTube is minute compared to the struggles that the true heroes of America and globally go through. Anyway, I don't know where I'm going with that. Anyways, I want to say that, first of all, big shout out to the chat today. We got a new whale member, Sailing to Crypto. He joined the club. We got a $100 super chat from Billy and 200 from Jimmy. So, and gifted memberships as well. So, big shout out to all of you guys. I'll just end with, if you want to circumvent paying capital gains on Bitcoin, and if you're using it as a form of payment, I don't think you need to pay capital gains. I'm not 100% sure on that, but I'm just kind of thinking about the scenario myself. If you buy a car and you pay taxes on the car and you pay in Bitcoin, I don't think you need to pay the capital gains. Maybe I'm wrong, but I don't know. It seems like an interesting situation where, hey, let's just say, hey, I can drop 50K. I can sell one Bitcoin and pay the capital gains, or I can buy a car, pay the taxes on the car that I was planning on doing anyways. And
this guy are playing.
Oh man, another new. So
we've got a bidding war.
So you got Crypto Billy dropping $101 super chat,
$1 to win,
which brings his grand total to $201 in super chat, being the leading Sin City crypto donator today. So big shout out to both of you. And slightly bigger shout out to Billy because you one-upped him, literally. So there you go. All right. So let's give a shout out to channel sponsor, Cans Blue Wire Tech. Your 4K stream would not be coming through today without the help of their IT solutions. And then also they have security as well. And then I think that's going to do it for us today there, Rocco. Rocco, do you got anything to say? You've been awfully quiet today.
Oh, I was enjoying the chat, so reading all the comments, so that's always fun.
What was your favorite part of the chat? Was it the money or was it the
No, they only come at the end, so it's okay. No,
okay.
I was enjoying in between. Yes.
All right.
Yes.
All right. Well, big shout out to you guys. Thank you again.
Also to the whale member. Yes. Crypto.
Excited.
Yes,
big shout out to the whales. For those of you that are whale members or not whale members, if I want to pitch you, why do you want to be a whale member? Well, you get your name in the credits. Is it worth the $20-something a month? Probably not, but it helps us out. And then you know what else helps us out is picking up some Sin City Crypto merch. So In and Out Crypto, it's stamped there on the top of Rocco's hat. And also, if you want to pull up the website, take a look here.
So I'm gonna also then, if it's selling to crypto is gonna be part of the Discord, I'm gonna put there is a discount code so you can go ahead and buy some stuff in there if you want to. Okay, you get 10% discount.
Then lastly, before we end the show, Jimmy did put a one more super chat for $1.01. So you guys are funny. I feel like you two should. I feel like if Jimmy and Billy went out to dinner, they would be the two old couples that are fighting over who's going to give the credit card to the server. Be like, no, I'm paying for this. No, I'm paying for this. I'm paying for this. So. All right, guys.
1 and 1.
And $2 super chat from Billy. All right, we're going to end the stream. You have precisely 30 seconds to throw your last super chats out there. So thank you guys for joining us. Without further ado, we're going to sign this thing off. Rocco.
Yeah, let's go with the finger tornado. Let's go.
You guys.
Thank you, Forrest. Forrest will be back Monday.
Sin City
Monday.
crypto. Cash is Cuvée. Yeah. Sin City crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Name the coin, it's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy the dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon and to the solar. Won't don't be letting FOMO
There we go.
control
Keep the video
ya.
replaying again.
When the finger tornado close ya.